You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group and co-hosts Uncle Mike Tusaw from St. Charles Wealth Management, Mark the Greasy Meatball Sebastian from OptionPit.com, Andrew the Rock Lobster GIOVINAZZI from OptionPit.com, and Henry the FLOWMASTER Schwartz from CBOE. The Option Block is brought to you by CBOE. When it comes to trading volatility, trust CBOE, the creator of the VIX Index, for in-depth and relevant information. CBOE's tools and services gives you up-to-date trade insights, analysis, and positions of VIX options and futures. No matter what kind of trader you are, there's plenty of useful information to take the guesswork out of creating your portfolio strategy and to help you make more educated moves in the market. Visit www.cboe.com/VIX today to learn more. The views expressed herein are those of the speakers and do not necessarily reflect the views of CBOE Global Markets Incorporated or any of its subsidiaries, collectively CBOE. The information provided is for general education and information purposes only. There are important risks associated with transacting in any of the CBOE products or any of the digital assets discussed here. Before engaging in any transactions in those products or digital assets, it is important for market participants to carefully review the disclosures and disclaimers contained at www.cboe.com/US_disclaimers. These products and digital assets are complex and are suitable only for sophisticated market participants. These products involve the risk of loss, which can be substantial and, depending on the type of product, can exceed the amount of money deposited in establishing the position. Market participants should put at risk only funds they can afford to lose without affecting their lifestyle. And now, get ready to hit the Option Block.
All right, everybody. That music means we are back once again for a little show we like to call around these parts the Option Block, what the cool kids call the old OB. My name, of course, Mark Longo from theoptionsinsider.com, as well as from the ever-exciting, at least we tend to think so, Options Insider Radio Network. If I sound a little bit different, it's because I'm not coming to you from our Chicago studio. No, I am beaming in from yet another Southern studio, listeners, this time in Nashville, Tennessee, for the annual Options Industry Conference. It's been a great time. We have a studio down here. We're rotating in a bunch of guests, including our first frequent offender. I have to bump him up first as we get to the CBOE hot seat first here on the show today, because I am pleased to be joined in person for the second time in like a month and a half or so. We're making a habit of it here by Mr. Henry Schwartz, the FLOWMASTER from CBOE. Mr. FLOWMASTER, welcome back to the show, live and in person again, sir.
Thank you, Mark. It's nice to be here with you and at the Options Industry Conference, where there's about 350 professionals, people representing all the exchanges, brokers, some of the big hedge funds, quants. It's a great environment, seeing some nice new innovative ideas and technologies. It's awesome.
It is awesome indeed, and we are also joined today on the show, not by Uncle Mike Tusaw. You know, Henry and I came all the way down to Nashville to do the show, but Uncle Mike, too much going on in St. Charles. Couldn't even make it on the show today, so we'll have to give him a hard time. Send your hate mail to at Mike Tusaw on Twitter, listeners. Tell him why weren't you on the show today? But we are joined by the far northeastern contingent, a.k.a. the rockingest of lobsters, beaming in once again from the shores of Maine, Mr. Andrew GIOVINAZZI from OptionPit.com. Mr. G, welcome back to the show, to you as well, sir.
It is nice to be here. And I hear you guys are in Nashville, living the high life in Nashville, eating a bunch of ribs and living big.
It's a good time. Henry and I almost bought 3-for-1 boots last night down the strip down there. That's the deal. 3-for-1 boots. You need a pair of cowboy boots? Because I could buy 3 for the price of 1.
I'm already on my fourth Jack and Coke.
Yes, Henry has enjoyed a few beverages already here. Pre-showtime, just to get warmed up.
Oh, that Longo bought you a drink?
No,
my gosh. He never buys anybody drinks.
It's free at the conference.
I bought it in the drink by way of the conference, yes. It was the gift of my presence at the conference that helped bring it over the top. And listeners, we have gifts in store for you as well, because it is time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
Of course, welcome to the Trading Block, the portion of the show where we go crazy. We break down what the heck's going on out there in the market. So, we got a little bit of craziness out there in the old markets this week. I leave Chicago for a couple of days, and we get all sorts of a little bit of red on the screen. We actually managed, surprisingly, to break away from the 41.5 level that we were just kind of glued to forever. We got down below it. Today, they're trying to get back at it. The market's rallying back up to that 4,100 level, so not quite 41.5, but within spitting distance. Who knows? The day is young. We're up about 1.3% right now in the S&P. We've got the Dow up about 1%. And the NASDAQ closing in on 2%, about 1.9% to the upside. Of course, all that means a lot of our vol friends have been pretty much snoozing. They knew I was leaving town, and so they decided to do a whole hell of a lot of nothing since our show on Monday, listeners. VIX itself, coming into the start of our show, was at a 1710. That puts it down a whopping tenth of a point. For a little while there, it was literally unched on the week from our Monday show. So vol just taking a respite around all this vacillating around 4,100. VVIX, one of the few big movers, coming in a wee bit this week. So I'm guessing some of that put juice got a little bit squeezed out of the market this week. Still frothy, still effervescent, hanging out at about an 87, but that's still down 9 points from where it was this time last week, or I should say this time on Monday. So we are no longer threatening the triple-digit level, listeners, from a VVIX perspective. But hey, once again, the day is young. We shall see what comes along as we keep on rolling. Our old friend VXX at about a 39 even when we kicked off the show. It puts it down a whopping 0.3 of a point. So tons of action out there in VXX. UVXY, same deal. This thing just needs to reverse split. It is ridiculous. It's at a 370 right now, down 0.1 of a point. SVIX, 1865, also down 0.1 of a point. UVIX, one of our levered friends out there, 1180, down about 0.3 of a point. And VolQ, a.k.a. the at-the-money vol of the NASDAQ 100, 1980, down 0.2 of a point. All that a long way around to saying, listeners, not a heck of a lot evolving since our show on Monday. But you know what, listeners? We do have a special treat in store for us. Like I mentioned, I am in the studio here with the FLOWMASTER, and I happen to know for a fact that he prepared an extensive presentation for this year's OIC conference, which he ended up not presenting. So we get a treat here on the show instead. We get our own personal, just for you, the listeners, a state of the options industry. This is a much anticipated presentation, listeners. People come to OIC just for this. They come for Henry's breakdown of what the hell's been going on over the past year in the world of options. So, Mr. FLOWMASTER, I turn it to you, sir, now. The floor is yours. Regale us. What is the state of the options industry, sir?
Well, thank you, Mark. And yeah, for about the last 10 years, I've done a nice big presentation with 30 or 40 slides, really just going through the data that the industry is producing, kind of where we stand in terms of not just volume, but kind of under the hood, what's making up the volume, what's behind the trends that we're seeing. So I'll give you a short version. As you know, option volume set another record last year, and this year actually I focused on last year and then also including Q1. So and really, so the difference between 23 and 22, as well as the year before. So we topped 10.3 billion contracts last year. And, as you know, we had a billion contract month in March, and the average daily volume this year is about 45 million contracts, which puts us on pace for 11.5 billion. So just record after record after record. More growth this year than we saw in 2022. As the market kind of that sell-off subsided, and then we got into some interesting choppy waters, this year with the what seems to be a little banking crisis, but it's just kind of keeping things very, very active. And one of the most interesting things is that the focus really is in the ETF and the index volume. Single stock volume has kind of steadied, but we saw a big drop in that last year. It was off about 12%. That's kind of flattened out this year. So we look at that as a pretty healthy trend. It basically means that you kind of all the cylinders are firing. I think that the single stock volume probably got ahead of itself, on the heels of the meme stock craziness, and kind of now that pendulum's coming back. The biggest story of the last 6 or 9 months is all the zero-day trading, and it's really interesting this conference to hear. It pretty much gets mentioned on every panel because so many people are trying to kind of wrap their brain around what it means, if it's safe, if it's dangerous, if it's just a whole new use case for options and a new trading community that's popped up. Kind of how that interplay works with other segments of the market. But it's definitely there's a lot of attention focused on it, and just a lot of really interesting research going on. Paper came out just last week talking about what they estimated the customer experience to be in the zero-day SPX, and I kind of dug into their data. I disagree with some parts of it, but I think it's very healthy that you're getting a lot of brain power applied to these short-term trading. And it's just, it's kind of opening up the world to kind of a new community. So a couple other things, in terms of the state of the industry, we've seen trade sizes, which had, years ago, about 4 or 5 years ago, the average trade size in the industry was 17. It was very stable. And then that got as low as 7 during the kind of the retail revolution is what it was mentioned this morning on a panel. So in 2021, that's actually edged back up a little bit as the retail has kind of stepped back, and kind of dropped their flow, and it's been made up by a little bit more institutional and more firm participation, which both of those segments had really been dampened during COVID. It looks like the firms and the big funds were hesitant to trade when everybody was kind of working from home. Open interest, we hit a new record at the end of 2022, I think in November. One interesting thing there is that you don't get the increase in the open interest that corresponds to the volume that we're seeing, because for 2 real reasons. One is the zero-day trading doesn't actually result in any open interest because OCC doesn't publish it. They asked me on my panel yesterday, if I was the king for a day, what would I do to the markets? One of them was, I said real-time open interest, which would be wonderful. I don't know if that will ever get there, but even, there's not actually any real reason they couldn't disseminate the zero-day open interest after in the clearing process. And that would be nice to see. It would give us a little more transparency, which is kind of always something that I like to focus. Volatility is always a big focus of these conferences. Last year in the market, volatility was a little bit more normal. We'd seen, in 2022, volatility didn't spike, even though the market sold off about 20%. That kind of kept everybody, really kind of scratching their heads, because a lot of people buy puts, a lot of the portfolio hedgers buy puts, and they expect if the market goes down, the puts are going to pay off in 2 ways. One is you have a strike price, you have some delta. But the second thing that they count on is for volatility to spike, and that didn't happen in 2022. I don't think VIX got above 32, even though we had a 20% sell-off. It was kind of a orderly, prolonged slide lower, and so that has kind of knock-on effects. Basically people stopped hedging because it didn't seem to work, or at least that's what people say. And then that changes kind of the shape of the volatility curve, and you get a flatter curve, which is what we saw. But this year, things have kind of come back up. The skew of the volatility is a little bit more typical, steeper. It's still not as steep as it was back in 2019. And then the other thing that's that's definitely on everybody's radar is the market structure changes, which for options people is a big deal. We're going from 16 exchanges to 17 when MEMX starts later this year, and then there's actually 2 more on the horizon, and one of them is MIAX, which is an electronic exchange, opening a trading floor in Miami. And in response to that, I actually did some work to dig out the data on floor activity for the 4 exchanges that have a floor. CBOE is one of them, but there's still floors on the Philly, the Amex, and the ARC exchanges. And there's a surprisingly large amount of floor activity. In fact, the data I pulled up for Box in January showed that half of their volume was actually trading on their trading floor, which blew me away. In fact, I was lucky enough to see a couple of the people that work at Box and I showed them the data. I'm like, did I screw this up? And they're like, no, you got it right. So that floor trading still plays a really big part, especially when you're talking about big, complex trades that need negotiation. And so it's really interesting to, we'll have a 5th trading floor probably next year, I think, when Sapphire gets opened. And that's about it. I mean, I have some data showing retail activity, specifically is down about 5 or 6 million contracts a day from kind of peak. Like I said, that's, a bear market or a sideways market is more challenging for a lot of the retail flow. But, at the same time, somebody mentioned today in a panel, he feels like some of these retail traders have kind of graduated to more advanced strategies, things that will work in sideways markets. So that's the summary. And I'll even give you some shots to stick in the show notes.
And one of the things you always talked about too is the fragmentation or the concentration really of the marketplace, Henry. What percentage of the flow is gobbled up and dominated by, let's say, the top 20 or so names? Is that a metric I know we started moving in the right direction the last couple of years. So is that a metric you're still keeping an eye on, or?
I do still watch that concentration, and you're exactly right. I think the last time I looked at it, the top 25 names were doing about 80% of the market. And in all of these panels, people really do. They talk about the top 100 or the top 500 names, and they kind of ignore the fact that we have another. We have a total of 6,000 listings right now. So if you take the top 500, you're missing 5,500 underlyings. That breadth of market where things were trading definitely had expanded during the retail boom, right? Because retail would jump into all sorts of stocks that people had never even heard of. That has actually dwindled a little bit, so the concentration has gotten worse. The one thing that I'll say, though, on that is that the price improvement that retail tends to get in even the bottom names still is very favorable for small retail trades. So even if you trade a name that's that's in the at the bottom of the top 1,500 or something, you really do, as an option trader, you need to be very aware of. You look at a market and you have to have your expectations. But in so many cases, we're seeing mid-market prints from the retail accounts that are very helpful for retail. It was said today on one of the panels. It's never been a better time to be retail. And it's true, but you do have to have a good understanding of market structure. And I was talking to you earlier, Mark, that the real issue that I have with payment for order flow is it can be a little inconsistent. You can get a great fill, and then you can do another trade or tell your friend about the same trade, and they can try to do the trade, and they don't get a good fill. And to me, that's the part that stresses me out, is that inconsistent experience. It kind of gives you a queasy feeling.
We don't want any queasy feelings here on the show. If you get queasy, there's a basket over there, sir. So just we'll keep on rolling with the show. Right on out to the shores of Maine. Mr. Rock Lobster, sir. A lot of data just dumped in your lap. Any thoughts on that? And then aside from that, sir, anything else catching your eye out there in the markets this week, sir?
Yeah, I didn't know New Yorkers could get queasy. I thought, the last city on earth that gets queasy is New York. They get disaster after disaster befall, and the New Yorkers just bounce back. Look at this. Look at this. They survived de Blasio. Come on. So one thing I always laugh is we do 45 million contracts a day right now. And I think a busy day in the old days was 1 million contracts. That's when I was at Florida. That doesn't feel like very long ago, but I guess it was 15 years ago. So like that 45 times the business. The fact that there's a trading floor in Miami, like, heck, I might go hang out a shingle. What the heck? You can live in Miami.
I was going to say Miami trading floor. That has a certain ring to it. Yes.
I would leave the beach. I would leave Maine for Miami Beach. It's actually, could be interesting. Yeah, and just to, I still have some friends that still are pretty active on the P Coast. There is on the floor. There's a lot of crossing, a lot of quoting. And a lot of those pits are still used for quoting. You just sit and listen to the SPX for an hour and, just endless quoting, endless skew adjustment. They like that, I think for option traders and like, especially for upstairs, I know Henry was an upstairs guy and he could maybe comment on this, but like the floors are always good for information. It's hard you can have electronic marketplace, but it's a little different when you have the live. But again, it's been a while since I've been a market maker, so I just see what they're doing without actually doing it anymore. But all that, there's still activity, and the fact that they even can make another floor means they feel like there's some way to grab some of the business. And I think just a lot of those big orders get crossed on the floor, like, how are you going to put up 10,000 contracts? You just don't throw it in the system and then let everybody lean on it for the next 20 minutes. It's just, so, anyway, so those are some of the broader issues I see. But like the businesses just keeps growing. Our business keeps growing. People want to keep learning about it. I did think, I thought the thing that Henry said about that was giving him the queasy feeling, about the customer experience being different. I think it's very important, but it's also, I think the industry does a poor job. And this is one thing we spend a lot of time in our rooms and teaching other students is like what to expect. The industry does nothing on teaching people, managing any expectations about fills, how trades fill.
Yeah, people have no idea what
the other side comes about, right? All that stuff.
How many times have you seen
people? It's just some magical liquidity thing happening there, So I think Henry has a great idea. They could do a lot to help do that so people could understand more. But, it goes part of the education process. But we do a fair amount of that just so people understand, like, how to fill a trade. And I think there's, besides maybe the independent educators, I don't know if the CBOE would touch this as an issue, but yeah, there's tons you could do in this area just to get people to understand, how to fill a buy right or something like that.
That'd be an interesting class or an educational session. It's just, what is a good fill, right? I think if you ask 10 different people that, they'd have 10 different answers on what a good fill is. You're right. I don't think the retail has a good sense for what a good execution is at all. Unless they are, selling the offer and buying the bid, they think they're getting screwed. Right. That is an interesting thought. Maybe we need to devote more content here on the network to really where should you have been filled in this environment, because things are crazy. But aside from that, sir, anything else catching your eye out there in a relatively meandering volatility market right now, sir?
Well, we're back to kind of that, and for the last 6 months, wow, look at this rally go. It's just like straight up right now. It's like 3 stocks are holding the market up again. But prior, with we're going to have another Fed interest rate announcement. And for the last 7 or 8 months, almost a year at this point, these announcements have come across with like a fairly flat term structure and VIX. And there's with a fairly heavy front end of vol, heavy meaning expensive in this case, creating a flatter term structure, and not today. Like Mark and I were laughing about buying a strangle in the queues for tomorrow, and it would already be up. And this was only like 3 hours ago, and the queues are up even more. So, it feels like it's an endless. Well, it's a pretty big melt up, is what it feels like right now. But the fact that we are in just this super steep contango, and like the vol in the front month is as low as I've seen it going into one of these events. Let's see where we are. So the Mayo 3, I'm just looking at SPY right now. So it's $6, right? So the Mayo 3 straddle is $6, $6.50. Probably the lowest price I've seen with 4 trading days total to go. And yeah, they're pricing it at 15.59 weekend adjusted. So like that's as cheap as that straddle is going to be. And you had a 5 3/4 point move alone today. So, I mean, I'm going to be in Chicago next week, but I have to say I would be a buyer of just index gamma and just long all the VIX puts I could find. Just because that's how it's setting up. Because like I just think that from a price point of view, we have a relatively low realized vol, but we do have, the path dependency thing. You can still make money buying straddles if we crawl up like $3 a day. Even though at low vol, you can still make money, and you can alleviate the volatility risk a big deal. You can't alleviate the decay risk, but you can alleviate a lot of the Vega risk by just buying a bunch of VIX puts that are like crazy in the money right now. I'll throw this at you too, Mark. Looking at vol, if I did riddle me this, right? What would you say the 1921 strangle is right now in VIX? And it was actually cheaper this morning. It was I'll just tell you. The 1921 VIX strangle, 19 put 21 call was $2 this morning, like 205.
I was going to guess somewhere like a 2 1/4 is what I was going to say. Yeah. Right.
It's trading 230 right now, and it's freaking $2 in the money. There's 30 cents of juice in it. Now, again, I understand it prices off the future, but I do a lot of trading based on the intrinsic. Because if you snooze, like if you're Rip Van Winkle and there's no action in VIX, the strangle probably will still pay. It's almost like they're giving you the call for nothing. I mean, I'm just watching SPY. I mean, this is like a laugh how we're moving, but like you were just going, straight up. So and this is the point where, you could tell where the liquidity provider, like vol is not going down anymore, and just stocks are going straight up. So to me, that's probably the best time you want to own gamma into this type of thing. Looking at downside flies, the skew is going to starting to get really steep again here. So I think there's a lot of opportunity here. I'll be in Chicago, so I won't be trading a dang thing except what we do with our students or stuff on Wednesday, Thursday, Friday. But it's like opportunity wise, I think it's a pretty interesting setup right now. So I just closed a bunch. I closed some of my VIX strangles today. I closed the puts, and I had already closed some of the calls, so I don't have a lot left. But I would still do as much as I can in the May cycle, to be quite honest, if I could actually watch it to close it, because it's relatively it's very odd because VVIX looks kind of highish, but the option vol when you look at the prices actually doesn't feel very expensive right now. So listeners can take that with a grain of salt. Oh, we might talk about it in vol views later today. So we'll see. But anyway, that's the gig, and that's kind of what I'm looking at right now. But when you look at it, it's only a few stocks are really pulling this market right up, and it's the old FANG.
Yeah, you mentioned we are going to be doing an early edition of vol views later on today, listeners. So pro folks, you'll be getting that in your ear holes early, and the rest of you on the on-demand side will be getting it on your feed one day earlier as well. Kevin's traveling tomorrow. I actually saw Kevin yesterday. He'll be here in the studio a little bit later today, so it should be a fun vol views to come as well. Just like how much fun the Rock Lobster is having with all those VIX strangles. He's been Mr. VIX Strangle of late, and it seems like it's been working out really in both directions. Very strange for all things VIX strangles, but a good problem to have. Let's keep on rolling out there to the Flow. Since we got the FlowMaster here, let's fire up the old FlowMaster platform and see what's going on in the world of Flow. Let's start off in VIX land. VIX today, 372,000 contracts on the tape. So not a sleepy day, not blowing the doors off either. A little bit of a combo of the two. The ADV still holding firm from Monday's level. We were a little bit shy of 700K on Monday, and we're a little bit shy of 700K today. 691 to be precise out there. SPY, though, again, it's a day that ends in Y, so SPY's putting up numbers. 4.7 million contracts. The ADV, though, coming a little bit in the wrong direction, dipping a little bit below 8 million right now, 7.9 million. Still a lot of flow, and looks like SPY is going to hit it again today, so I don't expect that ADV to remain below 8 million for long, but at least for today it is. The S, 1.65 million. I'm sure if I pull up my usual zero-day scans here, I would see that probably the top 20 all zero-day again. Maybe the top 40, maybe 35 of the top 40 as well. So a lot of love for all things zero-day. It's been the talk of the conference here as well. A lot of our guests coming through the studio have discussed it. A lot of my little side conversations here at the conference. Everyone is obsessed with all things zero-day. Even some of the longer-term guys, some of the guys who are putting up large block flow for institutional clients are starting to wonder about it and ask questions about it and see how they could dip their toes in those waters. So it is an intriguing area for a lot of people. Everyone's also asking this week, when are we going to see single name zero-day? So that's definitely the question on everyone's lips. So perhaps maybe sooner than I thought, listeners, even though I still don't think it's coming this year. Small caps, let's go out to IWM listeners, 464,000 contracts on the tape. The ADV exactly 1 million right now. So that ADV is still holding firm out there in small caps land. And last but not least, on the big indexes, let's go out to the Qs, 1.86 million contracts on the tape, listeners. The ADV, 2.8 million. So still a decent amount of volume out there, even though that's dipped below the 3 million level as well. Now let's get out to the single names, listener. That's what everyone's listening for on a week in the heart of earnings season like this week, listeners. Man, we got some big names popping off this week. Here's a quick list. Coca-Cola on Monday, Verizon on Tuesday, Mickey D's, PepsiCo, Spotify, Microsoft, Alphabet, and Chipotle on Tuesday. Wednesday, we had Boeing and Meta and Roku. Thursday, obviously today, we have American Airlines, Caterpillar, Eli Lilly, Southwest, MasterCard, CROX, Amazon, Intel, and Snap. Tomorrow we have Exxon and Chevron. Let's get to some of those hot single names out there today. Let's see what's going on. 234,000 contracts. That's what it cost you to break into our top 10 today. Listen, I get you to the old Goog, not Google. We're not talking Alphabet Class A. We're talking Alphabet Class C. So we got a double dose of Alphabet in our top 10 today, listeners. Spoiler alert. Class C coming in at number 10, 234,000 contracts there. Number 9, we're moving on out back to the land of contagion fears. It is First Republic, listeners. 316,000 contracts on the tape. First Republic, by the way, 634, up about 64 cents on the day, or a little over 11%. So maybe the contagion fears are behind them. Who knows? I was talking to some folks from some regional banks last night at the conference. Let's say the last 6 weeks have been a challenging time for them, but it seems like they're trying to keep their heads above water, and it looks like First Republic doing the same out there today, even though folks were sounding its death knell not too long ago. Let's go out to number 8, listeners. We're going back to 2021. It's meme stock time. It's AMC, 333,000 contracts on the tape. Trading $5.50 right now, up about 25 cents on the day. So nice little pop here for AMC. Number 7, the other half of the Goog empire there, Class A, aka Goog L, 108 and about a quarter out there, up about $4.50 for ye old Alphabet Class A. So a nice little pop for them today, helping to carry this market on its shoulders going forward. Number 6, yes, I said number 6. I can't remember the last time we saw we saw Apple this far down the list, listeners. You got to go back a ways. Maybe Henry has that data off the top of his head. Probably not, though. I'm putting the FLOWMASTER on the spot. But yeah, Alphabet, I keep saying Alphabet. Apple, number 6, 452,000 contracts, trading 167 and about a third, up nearly $4, about $3.60. So a nice pop for them today as well. Let's see, they're within spitting distance now. The 52-week high, listeners, 176.15. So getting a lot closer to that one today. And again, Apple, another one that's just carrying the market forward on its back, listeners, 452,000, even though it is a very light volume day for Apple. Everyone's looking at other names today, including number 5, NVIDIA. NVIDIA trading a little bit shy of 270.5, 270.40 right now, up nearly 90 cents on the day, or about a third of a percent, but good for 448,000 contracts, and the number 5 spot in our top 10 this week. Number 4, it's the Rock Lobster's favorite. It is good old Microsoft. 643,000 contracts on the tape for them, trading 303.25 right now, up nearly $8 or about 2.7% today. So, man, it is a love all things tech kind of day out there today. My goodness. Number 3, actually, we've got our old friend Meta popping off. They had earnings last night, so we're seeing their post-earnings blush. Nearly 1 million contracts on the tape for them, 986,000. Meta up 32, almost about 31.65 right now, or 15.1%. My goodness. So the days of the sub 200 level, our friend buying all those calls, he must be pretty happy out there today. And then number 2, we've got the Amazonians, listeners. They are pre-earnings right now as well, but they are not waiting for earnings. They are putting up some numbers. 1.13 million contracts on the tape for Amazon. Amazon up 540 right now, or a little over 5%, trading about 110.33. And again, good for 1.13 million contracts. And the big dog still today, even with all this other stuff popping off, Tesla managing to hold on to the top spot yet again, trading 159.20 right now, up about 540. Good for 1.5 million contracts out there. So my goodness, a tech tsunami hitting the top 10 out there today, listeners. In terms of the reports, let's see what we've got really quickly. We have names popping off here in the earnings move results. We had CROX before the bell today. Of course, our rubber shoe friends, they were trading 147.75. They're pricing in 9%. They delivered nearly 16% to the dark side. So apparently no love for rubber freaking shoes. Meta, yesterday after the bell, 209.40. We just talked about them. They're only pricing in a little bit shy of 9%, listeners, 8.7%. They delivered, as we said, over 15% right now. So Meta definitely dominating our outperformer list. Looks like beating their implied by about 70%. My goodness. Southwest, today before the bell, they were trading almost $31. They were pricing in 4.3%. They delivered 5.4%. So a little bit of outperformance there. Let's go out to American as well before the bell. 12.75 is where they were trading when we ran this report. They were pricing in $4.30. In the past, they moved $4.90. So not a heck of a lot of extra juice there as well. Let's see really quickly. A couple other names popping off here. We've got other names. You can check out these reports for yourselves, listeners. We'll do Roku really quickly. They're a former frequent offender here on our top 10, even though we don't talk about them as much anymore. They were 56.5 going into their announcement last night. They were pricing in 12.2%, listeners. Get this, they delivered 1.1%. So they underperformed by 91%. So a little bit of premium harvesting looking pretty good right now out there in Roku. You want to see the rest of our names that we have reporting right now, the names that we have coming up for the rest of this week and next week, or the season or the trades reports. By the way, the season right now is stacking up at 104%. So that ridiculous 150+% premium going the way of the dodo. We knew that was going to happen. We're hanging out still above our long-term average right now of 96%, which in and of itself is pretty inflated. We are also tracking 75 long straddles and 49 long calendars for your information and education out there. You know where to go to find that, theoptionsinsider.com. Click on the Options News and Articles tab to begin your journey to the dark side as we continue our journey right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. Let's do it. Let's get weird. Let's get wild. Let's unleash the Eye of Sauron and see what it finds out there this week. First off, let's go out, because the FLOWMASTER is joining us in person. Let's go out to the FLOWMASTER's neck of the woods. Mr. FLOWMASTER, I know you've been busy running your own personal Eye of the FLOWMASTER to see what's been catching your eye out there. So do you want to start with the stuff from today, or do you want to pay off our rubber shoe friends first?
Well, I think we should kind of take a look at CROX, because I know last week we were talking about the flow, and that led to a discussion about gibbets and
yes.
and custom
gibbets versus gibbets. Yes.
I even Googled you can order custom CROX with gibbets. It's kind of an interesting one. I actually was trying to look back. I don't remember what we're talking about, what specific flow, but I know it was bullish because that...
It was, I have it here, it was the April expiring on the 28th, so tomorrow, the 150-165 call spread. Paper bought it for $3.80, looks like against stock. And the stock was 145 at the time. So the stock leg looks all right.
Yeah, that's right. It was I was kind of believing it was probably a stock replacement, which actually, if that's what it was, then this is the kind of situation you want.
Actually,
because
was kind of savvy.
They're not losing 18% on their holding. Yes, they're losing everything that they paid for that spread. But if you think about it, a $3 spread is definitely better than losing. This is exactly what they were looking for if that was the situation. So that's really kind of interesting, and it's funny. It plays into some of these analyses that you read about when they say, well, the customer lost money on this trade, so that's a bad thing. But this is an exact example where you're like, no, actually, the customer is much happier to lose the option premium than they would have been holding the stock. So
I think all of us last week were all okay with the stock leg of that trade. We weren't as enthusiastic about buying the call spread, but we're like, we'll dump some CROX stock here, sure.
Yeah. So
and that seems to have been the right trade right now.
Yeah, that's a pretty cool one. So I was able to, luckily, because Trade Alert really is good at kind of finding these funky outlier trades. I found a couple that are definitely worth discussing. One of them is Colgate-Palmolive, which has earnings tomorrow morning. And at 11:37 this morning, there was a buyer of 4,000 of the May 77 half calls for $1.30. That's a half a $1,000,000 trade. It's opening. It's right in front of earnings, and it's also the delta impact. I think is about 3% of the daily stock volume. So it's a pretty big trade, especially for Colgate, which I think the average daily volume in the name is only around 3,000 contracts, even less than that. So that's a bigger. There's actually total call volume in there now is up to 8,000 contracts. Looks like some May 82 half buyers as well. And then if you go and you look at the expected move in that name. In our system we show, now it's funny, there's no weeklies on that, so there's no Friday expiration to go off of. You have to actually interpolate it the old-fashioned way, which is looking at the May versus the June vol, which for us comes in with an implied move of around 2.5%, which seems a little cheap if you ask me, but then actually I went and looked at the historical moves. Those average 2.5%, so it's kind of right on track. They did pick a pretty meaty strike, though. It's only 20 cents out of the money, and with the longer term expiration, slightly longer, they kind of have some time to play the gamma as well if it whips around. So that was one I wanted to look at.
Colgate-Palmolive listeners, that was 4,000 of the May 77 halves trading for $1.30. Paper buying those. Colgate right now trading 77.31 listeners. Not a terrible year, not a great year, off about 4% on the year. A year ago, they were trading about $81. They actually got to their high for the year back in August of around 83, almost $84, about 83.80. And then they came for it right away. They drove it down almost immediately after that in October to the low for the year of a little bit shy of $68. So quite the drubbing in Colgate-Palmolive in August to October of last year. Then they bid it back up again to about almost $80 right on the beginning of this year. That's where it pretty much opened the year. And then they drove it back down to about $71 in early March, back up to where it is right now, about $77. Mr. Rock Lobster, you got any love for this upside here in Colgate-Palmolive, sir?
I was just trying to figure this one out. I do like Henry's Crocs one. This is all like the eye of the beholder, right? Because they killed this stock on earnings, and the earnings didn't look that bad, down $25, and they were taking Facebook up $30 on just because their revenues are flat, or they're up 3% year over year, which I guess is a corporate turnaround, pretty big because their earnings are getting kind of their revenue was smoked, but. You know what? If the market decides to like something, they decide to like something. So I find that kind of interesting. As far as the Colgate goes, I was trying to see. Oh, the CL. I'm trying to see because it's all red, which of course I'm blind, so I can't see what the heck's going on with it. But yeah, I don't think again, I think the upside option premium in general is pretty reasonable. And all of these stocks have done, I guess, pretty good. But, you go out to May, that it's not a whole lot. Plus, it passes the day one test. Anytime you buy calls and you're already up, 25, 30 cents before the ink dries on the day on the ticket, it's usually a pretty good sign. So I do like that trade. It's hard not to like a trade that's already at money, but $1.30 in a $77 stock with solid 3 weeks to go is certainly not very much money to pay for an option. So listen, you got the broader markets up 1.5%, and you have a 19 vol on an at the money option. So the pricing looks pretty good to me.
All right, and Mr. Flowmaster, you got a newcomer for us here on the show up next. We got Big Five Sporting Goods Corp. Not one I see too often. Looks like they're headquartered mostly out in California and in the western U.S., which is probably why I haven't seen too many Big Five sporting goods in my neck of the woods. Usually we have Dick's dominating that stuff out by us. Trading ticker symbol BGFV, listeners, trading $7.85. Kind of unched on the day today. On the year, let's see, a year ago it was trading nearly $15, so it's been a bit of a rough year for Big Five. They're off nearly 50%, 47%, and it's been mostly straight down. They've tried to buck the trend a few times, most notably in August, but this thing has pretty much been straight down for pretty much the entirety of the year. We're hanging out not that far away from the 52-week low of $7.13, which they set just last month, listeners. So a little bit of a near-term rebound, but all in all, a pretty rough year here for Big Five sporting goods. Mr. Flowmaster, what did your eye of the Flowmaster find for us out there?
Well, yeah, this is fun. This one might be a cautionary tale because and it's funny. I looked at this was one that I was like, I don't even know what that ticker is, and those are always the really interesting ones. I do know that another sporting goods name, ASO Academy Sports, was also kind of a hot one over the last couple of years. So I guess maybe you would lump it in with that. So the call volume in Big Five is only 400 times normal. And it's almost all in the single strike, the July 10 calls. And what's interesting, and this is why I say it's a cautionary tale, is we saw sweeps of several thousand in the 25 to 30 cent range around 11 a.m. Stock was $7.94 or so. And the stock ran up almost to $9, 13% in the next 40 minutes. Now I was watching a panel downstairs, so I didn't see it live. These things traded as high as $1.60, and then the stock came right back down. So, and it was funny. I'm looking at the CBOE open close data to try to figure out if this is one of those ones where you can see customers buying but also customers selling, and it actually looks like it was relatively one-sided. It does look like customers buying all the way through. So if it was one of those deals where somebody with a decent sized wallet overbought to try to kind of see things catch fire, then it doesn't look like they've gotten out yet. So that's a really interesting one. But it's one of these. We send out that biggest profitable trades from yesterday. This one may not show up on there because the buyer, only had a brief moment to get out, and they didn't get out. But it's also it's worth looking at. It's one of these ones that if I was trading it, sometimes you see, big aggressive call buyer and you want to get in. There's other times that you really try to sniff out, does this really have anything behind it? But 40,000 contracts is a lot of volume for Big Five, which I think the average daily volume is a whopping 1,400 contracts. So, it's not a hard to borrow name. So it's not one of those ones that somebody's looking for a short squeeze. It's just a really interesting hunk of flow. But it's also the trades are relatively big. There's 1,700 contracts each sweep. It's not meme style. It's a funky one. That's why it's an odd block.
That's why it's in the odd block. Yeah, right. This is a ton of paper. I'm looking at it while you're talking. 43,000 of these July 10s have traded so far. Prices 26 cents, 32 cents, 50 cents they traded at one point. I got a feeling, I don't know, they traded up $1.05 at one point. So my goodness, I got a feeling those $1.05 ones are leaving a little bit of a mark right now. But yeah, this can't make the trade of the day, right? Because they didn't get out. They didn't get the other. It's not the theoretical trade of the day. It's the actual trade. Which, by the way, I've been looking at that. I like that. I know.
Did you see all the ones in FRC yesterday?
Yes.
Top.
We need to have a new segment. We'll do like maybe once a week. We'll do the trade of the week that we highlighted in the trade of the day that we saw, because there's so many in there that are kind of fascinating. It's a fun email. Listen, I'm sure the Rock Lobster has been enjoying it as well. Mr. Rock Lobster, are you enjoying your trade of the day email? And then what do you think? How many of these July 10s did you buy of the 40,000, sir? Mr. Rock Lobster, are you muted on me, sir?
Oh, I am. While you guys were talking, I'm still trying to find it on this thing you sent me on the Julys.
This is Henry. This is Henry. Henry, just look at what he pasted in just now.
Big. Okay, sorry. I'm trying to keep up with you guys. You're super.
We're on the fly
fast.
here. We're just rolling with the punches.
I know. You know that I'm kind of slow and plodding, trying to figure all this stuff out. That's why they call him the FLOWMASTer. So they certainly don't call me the FLOWMASTer trying to figure this out. I'm sorry. I am still trying to find the contracts that you guys are talking about. So sometimes it's hard for me to keep up with all this stuff.
Well, instead, we'll keep rolling. But there were 40,000 of the July 10 calls going up in your new favorite name, Mr. Rock Lobster, BGFV, Big Five.
BGFV.
Yes,
Okay, there we go.
Big Five Sporting Goods.
Oh, okay, now I see. Oh, and then there's 43,000 of them.
Yes, that's quite a few.
Maybe they're getting oh wow. So the stock spiked to $9. Oh my gosh. So I think somebody had a good idea, and then and now they're kind of everything is back to earth. So I don't know if it's going to look as good right now. Well, I mean, this is the low print of the stock in the last 3 or 4 years. So maybe it has a shot at some point in the future. Just not necessarily right now. But anyway. So, oh my gosh, I'm just looking at this.
I love his delayed reaction is almost like, worth the price of admission, right there.
Again, because it's hard for me to keep up sometimes.
He's like, oh my
goodness. I'm trying
goodness.
to find the thing, and okay. But yes, this could be quite an interesting trade. Yep.
All right, we'll keep on rolling. You know what else is interesting, listeners? It's a little bit of the old around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block, the portion of the show where we tell you what we're keeping an eye on here for the rest of the week into our next episode. Really quickly here, I also want to check in on our question of the week, see how things are faring. Mr. FLOWMASTER, this is right up your neck of the woods. You guys over there at CBOE just launched your one-day VIX. So we thought we'd ask our audience, the ultimate arbiters at the end of the day, do you think this short-term measure of volatility will be useful for your trading, or is it just another meaningless number to clutter up your trading screens? Very simple. Yes, I trade short-term, or no, this is not meaningful for me. Mr. FLOWMASTER, I know what your vote is. I won't make you vote. But which way do you think our audience is voting?
I think with all the attention on short-term trading, that they're actually probably pretty happy to have this number out there. So I think they're going to say it's actually a useful piece of information.
Interesting. Mr. Rock Lobster, you get the final word on this one until our audience speaks, sir. Which way are you voting, and then which way do you think our audience is voting?
I'm voting it could be an interesting piece of information. I think the audience will. I think they will. I think they say it will. I'm still trying to figure out how they calculate it, because the vols, it feels so low to me. So I'm trying to dig into the calculation and figure out how, why is the 1 day 12%? It's like, I'm trying to add up the numbers. It's still freaking me out. So I need Dr. Vix to explain to me why the heck that calculation number feels so low. But I know it's math behind it. I just can't figure out what it is.
Yes, I saw you sending out the entreaties to the once and future Dr. Vix this morning. Unfortunately, he was not on the receiving end. You'll have to reach out to him elsewhere, sir, to get your questions answered. But right now, listeners, you folks are answering the question. Nearly 3/4, 77.1% of you saying you're not into the near-dated VIX right now. About 23%, 22.9% saying yes. You got about a day left, sir. If you're listening after the fact on the podcast, you can still vote. At Options is the place to go to make your voice heard out there. As we keep going around the block, Mr. FLOWMASTER, in addition to all the interesting flow you're finding and all the data you're crunching here for the conference, what else are you keeping an eye on until your next appearance next Thursday, sir?
I'll send you a link to a spreadsheet I made showing that VIX one day next to the VIX and doing a little bit of kind of simple statistical analysis on it. It really is interesting, and I agree with Mike. The first numbers I saw, I was like, wow, really? It's 9? Like but you have to remember, it's easy enough to calculate now that we have enough short-term options. And I read through the methodology document, and you should too. It's really it's more of a 405-minute VIX. It's always kind of rolling. Like the 30-day VIX interpolates to the 30-day point. This one interpolates to the 405 minutes from now, as if one day went into the next day, right? So right at the open, it's using just the 0 days. By noon, it's using half of the 0 days and half of the next days. And by the close, it's using the whole next day. And what's interesting is that when there's an hour to go, they actually kind of stop counting today's options. But it is different because it's not, the regular VIX is done on a daily basis. This is done on a minutely basis. And it's just more volatile as a measure. But I have a pretty nice spreadsheet. I even use ChatGPT to get definitions for the statistical analysis fields so that you can see what the standard deviation is and what the mode is. And I'll give you the link to it. And that's actually what, we're spending a pretty decent amount of time focused on that and how to kind of educate the community.
Awesome. Same question for you, Mr. Rock Lobster. What are you keeping an eye on until our next episode on Monday?
I have to thank Henry for that information. He is a highly dependable person. Amazon earnings tomorrow. Can Fang lift the market to 4,200 or whatever? I know Tucson will be surprised, but he'll be happy. And as of right now, that's what it appears to be. A company like CROX making a lot of shoes just at a low multiple can't get people excited. But a tech company basically that has flat revenue year over year gets everybody excited. So I would assume Amazon would do the same thing, and probably Apple, right? I mean, it doesn't have to be great right now for people to pile into big tech. So it does feel a little top heavy, but again, this is not a market I was short. I like the strangle idea much better because in a liquid market, things can get goofy. So nothing would surprise me tomorrow, like 4,200, whatever. It doesn't. Nothing would surprise me at this point, given the reaction today. And the GDP news, not great. The inflation news looked kind of hot. Doesn't matter. So that's kind of a recipe for more, in my view, more volatility to come. So that's what I'll be looking at as I go visit you in Chicago next week.
Yes, indeed. Looking forward to it. Unfortunately, not looking forward to any more show today, listeners. That's going to do it here for the Southern Studio, at least for the option block. If you want more content in your lives, though, stay tuned. If you're listening on the pro side, I'll be back in about half an hour for This Week in Futures Options. And then later today for an early edition of Volatility Views, where I'll be joined by the Rock Lobster as well as Kevin Devitt from NASDAQ Live here in the studio. But before we go, let's go back around the horn. Mr. FLOWMASTER, if folks want to check out any of the stuff you folks are cooking up over there in the land of Trade Alert, where should they go? What should they do?
Just head on over to CBOE.com, look for Trade Alert, and at the bottom of the page you can send a request for a trial, and we'll set you up and we'll give you the ISOR button and everything.
It's the best button. You got to get it, listeners. It will change your trading life over there at TradeAlert.com. And Mr. Rock Lobster, same question for you, sir. Where should folks go if they want to check out all the latest volatility musings from the land of the pit?
Yes, I can't wait to see that I have Sauron button on the CBOE website. Click here to get your trade alert. Optionpit.com, or go over to Money Map Press to the weekly profit cycles. Learn how to use VIX and SPY and all that kind of stuff at Option Pit, 888-TRADE-01. Say you heard this show, and Ted or Andrew and our customer care team, they will give you 10% off anything you purchase just because you listen to this show. That's something for nothing. You can't get that anywhere else.
Can't get that anywhere else except the land of the pit, optionpit.com. That's going to do it for us. Again, back in about half an hour for This Week in Futures Options. Back again at 3 p.m. Central for Volatility Views, so a day early for Vol View, so that should be interesting. And then, of course, a lot of travel tomorrow, but back again on Monday, another episode of The Option. Stay safe out there.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.